A non-event, you can just forecast what it's going to do. So these are going to be very important numbers. Listen for the wee-woo in a second when the alarm goes off. The market's going to be kind of pretty crazy. What I do think, if I were to take a guess, and we get like a big poppy green candle that turns around and maybe sells. So if I were to take a guess, it's woo, and then maybe go or maybe break. I think we get exactly this, like maybe, 10 or 15 point pop. Here we go. 5%, which is a slight beat on the 5.1 estimate, 4% slight beat on the 4.1. So Michigan numbers are basically slightly lower than expected. So they came out pretty good. The consumer expectations of 58.1 and 58.4. Consumer sentiment is up. Current conditions is up. So slightly up because the trade war is not getting worse. So there's the pop that I was thinking we'd get. The consumer expectations gotten better and better and better. It was in the 40s earlier in April. It went to 46, 47. Now it's closer to 58. So consumer expectation is good. That's the expectation that we're probably getting. Pop and drop. We'll see what happens here. Nice and clean. So I think what we get this is that this is the launch point. So whatever we do get, we'll probably test this and decide what it wants to do. So nice little U-shaped move on this. I was right about that little bump here. So I think we get that. And then I think we get this. And then from there, it's going to decide what it wants to do. Anytime there's a news event, guys, look, this is how this works. Anytime there's a news event in markets, somebody says the Fed is going to cut rates 25 basis points. Market already prices in the guess. It's already rallied into it. But the fact when it pops on the news, very often people will sell off of that news because these are the dumb buyers. The smart buyers predicted that was the case and then market prices it in. It's called efficient market hypothesis. All available information is priced in. So with that being said, if the news comes in as a wash, meaning that it comes in expected, then price is a wash. This is where we priced in leading into the event. This is where we tapped after the event. Anytime you return to the starting place, the Michigan numbers are no longer a catalyst. It's called a non-event. If the market were to rally from here, people can say, aha, we rallied on the Michigan numbers. Well, no, we didn't, right? We would have rallied on Michigan numbers had we never come back to the same spot. The fact that we returned to the starting point means that it's no longer an event. It's a non-event. It was priced in. That's what that means. We had a reaction and we're back to where we started. It means we priced it in. Of course we priced it in. That was the expectation. So because the numbers didn't come off much further from the expectation, Papa Bear comes in and draws this, which was on point with what we saw. Pretty nice, right? Gonna learn something here every day. A non-event, you can just forecast what it's gonna do.